Well, hello, darkness, my old friend. We are seeing dark clouds circling over markets at the moment, and sentiment sours and perhaps gets a little bit extreme. We are seeing MAG7 stocks being taken to the cleaners at the moment. They're being carved out. There is an absolute buyer's strike. There's a liquidation going on. We are seeing the NASDAQ breaking key levels to the downside. That range that's been playing in for the whole year has now given way. How much further we have in store? Some of those flows are heading towards the east, but we debate where the buyers step in. We are seeing systematic players really taking to town at the moment as some of those trigger levels cut in and some of that length gets taken down. But we're also seeing tariff risk resurface, and the reaction function in market seems to be picking up. Dollar flows are really picking up at the moment. We're seeing good buyers taking place. Gold's breaking technical levels. We're looking at crypto and where the potential buy points are going to be. Blake looked at that specifically. There's a lot going on as the tides of change continues to impact markets. Let's go to the trade-off. Well, hi there. My name's Chris Weston, Head of Research here at Pepperstone, and we're joined in 2 seconds by Blake Morrow from Forex Analytics, and we're going to be discussing the inner sanctums of these financial markets, the breaks we're seeing, the flows, the movers and shakers, and how this could go down and where the probabilities lie in these markets, which, of course, dark clouds, as I say, are circling, and we are seeing high volatility kick in, which is great for traders. We've got to get those directional calls right. We've got to manage the risk. We've got to get the position sizing absolutely on point to the volatility we're seeing. Blake, please come in. I am dressed slightly more appropriate for these more concerned, sinister markets we're seeing. How are you feeling, mate? Are you back from Vegas now? Obviously, it's time to settle down. You're looking a bit more refreshed. How's the head? Are you seeing these markets in a kind of could be more of a risk-off mode? We're still starting to think sentiment's getting a bit extreme. Start to buy the dip. How are we feeling?
Yeah. Okay. So let's hold up the horse here. I mean, getting extreme. I mean, how long have we been in extreme overbought territory? So, a couple of days, couple of down days. We are not even at the 200 DMA yet. And remember, the 200 DMA in the S&P, just using that as a benchmark, is your mean. And remember, we can be on both sides of that. So, I know a lot of people. There's been a lot of discussions about how nasty of a day it was trading wise. Don't forget, we closed on our lows. So when you close on your lows, it's usually not a good sign. We got some pretty big data coming in tomorrow with the PCE. That could move the needle, especially if it's hot. Market's not going to like it if it's hot. And, I think we've seen the trends seem as of late that inflation is not coming down right now. So,
we'll see, mate. We'll see. Look, there's a lot to discuss there. I think we just go straight into topical thunder and discuss them in a bit more depth. Hit me. Yeah, let's talk MAG7 because tariff risk was part of the functionality as well. But you can't go past what we've been seeing in MAG7. If you take the basket, we're in correction territory. I look at Tesla. Tesla's in free fall at the moment. I think the fact that you've got Elon Musk, who's obviously part of the inner sanctum of the administration at the moment, and he's bringing a tariff. He's part of the reason he's bringing tariffs to so many of his key customers. That's coming to bite back because sales of Teslas in Europe are at 2-year lows at the moment, and you've got to think that policy is starting to bite back on Tesla. But I think for me, obviously, we saw Nvidia's earnings yesterday. They're very strong in terms of the quarter sales and their guidance going forward. A little bit of conjecture about their margins. Their guidance for margins was a little bit weaker, but Blackwell ramp-up's going really well. And if you're bullish on the stock, you probably looked at the numbers and said they're fantastic numbers. The investment case is still there. But the price action is there for all to see. We're down 8%. And for me, Blake, I think part of what we're seeing here is there have been people who have been tactically long the stock, thinking we were going to get a beat and raise, which we got. And they were hoping on the back of that for the stock to rally. It hasn't done. So I think some of those tactical longs have had to be taken off. But there's been a shitload of people buying out, taking out put optionality. You've seen that in the skew. And that massive put options, downside puts, as the stock has triggered on the down, you've seen prices move through some of those fixed strikes. The options dealers have had to hedge their deltas by selling the underlying. But there's just a broad-based malaise in US MAG7. So much of that concentrated capital has come out. Nvidia's just been carted out today on those flow-based dynamics, as I say. But are we at a point now where we start thinking about nibbling around, or are we just looking to continue selling? Is there more downside in store here?
I still think there's some more selling. Don't forget, like everybody's long, and I've got, it's always anecdotal evidence, but when I have people that have been calling me the last couple of days asking where they should be buying Nvidia, that means people are buying, these moves. The market gapped up today, post earnings just slightly, and I told our community, I'm like, look, they're going to sell this thing right at the open, and they closed the gap and then some. And we've seen the weakness. Fortunately, 2 weeks ago we talked about Mr. Softy. You might have recalled that from 2 weeks ago on the Trade-Off Show. Talked about Microsoft. Microsoft is still leading the way, and I know it's not looking so magnificent right now, but the fact is that little I want to say idea or the hint that the MAG7 was going to come under pressure really started with Mr. Softy, and it continues to look weak. Closed on its lows today, and it continued to be in a breakdown of a triangle. So I still think there's some behind it. And don't forget, there's tariff risk going into this weekend. We obviously got PCE tomorrow, so there's a lot of risk. They're just and some central bank activity moving forward. So
yeah,
there's a lot of risk coming up.
I like them. I still think there's further downside to go. I mean, you just look at the tape. Yeah, we tried to rally intraday in Nvidia, and people just sold straight into it. So look, what you've got a situation where a lot of these high momentum names, high growth names, are beating expectations, and the share prices are closing lower on the day. I mean, that's never a good sign. And then people are just selling rallies in this stock. Retail are not doing a huge amount. They're selling. There's just no buyers in there, and I think what you've got is there's so much capital still to go. Some of that's has been moving east because there's just been this explosion in AI in Chinese names. DeepSeek's restarted again, and that's causing huge implications. There's just too many questions now. I know some people have said that Nvidia is cheap. I know I would never ever buy Nvidia on a valuation basis, but some people are saying it's trading 21 times forward. Yeah, these are historically good buying levels to go into. We'll see, but yeah, I think there's still more of a shakeout. I'd still be expecting further downside in the MAG7 here.
And I'm with you. And speaking of which, let's go on to the next topic. Let's talk about the market and the sell-off that we had today. Just as we were getting prepared for the show and getting ready to hit our producers getting ready to kick us off. There's a big conversation in our chat room in the Forex analytics community about how it was a really bad day for a lot of people. You have to remember, Chris, that you've been in the markets for like nearly 30 years. You started as a little pup.
Long, 22.
Well, okay, that's me. I started as a little pup. Maybe you were about just a few years behind me. But literally, like I've seen a lot. I've seen the .com bubble. I've traded through it. I've traded through the financial crisis. There's a lot of traders that are the younger breed. This is a first for them. Their Pavlovian response is, "Oh, I just buy the dip. I just buy the dip." It was a very bad day for a lot of people. And I guess you take a look around and you're like, where are people hiding? And the dollar, everybody will go, "Oh, well, it's risk off, so the dollar is going to naturally be bought." There's a lot of tariff headlines today, coming from Donald Trump, and he really sparked this downside today. And so, yeah, the dollar was, a recipient of some of the flows. But in your typical safe havens like gold broke 28.80 and closed below it today, which is not a bullish sign. Just right. FYI. And we talked about the gold pivot last week. If you look last week's setup, we were at the channel resistance. So question to you, Chris. I mean, people are hiding in fixed income. You're seeing, bonds rally, yields come down. But where else are they hiding? Where are you seeing it?
Well, I think, some of them. I mean, there's been a massive outperformance in China, and Europe as well. European defense stocks have done very well, and some of the flows, and we'll see what happens with those. But maybe a bit of cash going. People sort of looking to cash because fixed income's not rallied too hard. I had done not in the session we just seen. In fact, our yields at the back end were up a little bit. So it's difficult to say, but I still think people are asking a lot of questions like, why are we? What's actually going on? And we're still not a million miles away from the highs. But I think you've got this combination of tariff risk, which people have pushed back and said it's not really, we're desensitized to it. I think that's being reviewed now. We'll talk about that in the next section. There's a massive amount of concentration of positioning in these MAG7, these high momentum names, and that's still got further to unwind. China has allowed competition here. China is giving choice for the first time. This huge pool of innovation in the US, which was just exceptional. People are questioning: is there? Is it done? I mean, it's not going away. That's still very much the case. That there's still very investable businesses, brilliant businesses, but you've got choice now, and looking at things like Tencent and Alibaba, and those factors as well. So I think you're seeing a capital redistribution, but I think growth in the US is something that is starting to be questioned. Trump's really not going to want to smack the growth button too hard. So I think you've got that working for it. That he doesn't want to create a policy mistake. But I think that people are concerned about what's happening. Immigration. I think that's his immigration policies are going to be negative for growth and maybe modestly inflationary. Doge is going to impact growth. I think that's starting to be called into question, and people are just saying, with valuations at very high levels, such concentrated pool of capital in some of these names, and question marks about pricing growth in the first place. And I think that's causing anxieties. And what happens then is it all just sort of perpetuates itself. I think what you're seeing now is markets are trading lower. That creates optionality. Dealers are having to hedge their deltas. And what you're also seeing now is CTAs, these systematic trend following funds who are long, max long, and a lot of these risk assets are cutting back because it's going through the trigger levels. And I think that's the issue now. So that's where you get the weakness breeds weakness. So I think what you're seeing now is just a liquidation of positioning, rather than earnings being called into question necessarily at this stage. So there could be more further to come. But at the moment, I think this is just a positioning exercise that we're seeing coming out of the market. And let's go into tariff risk here, Blake, because tariff has been an emotional roller coaster for investors and traders, because we went in thinking tariffs are going to go up really aggressively in China. It's going to be the big thing. Dollar's going to rally, and of course then we saw Trump coming out, pushing timeline back on Mexico and Canada, negotiating on reciprocal tariffs. But now I think we've seen things change once more, and what we've seen is tariffs in Europe potentially going up to 25%. He's come in and said, your drug flow on fentanyl is not doing what we want it to do in Canada and Mexico. You're getting hard tariffs 25% on the 4th of March. That's done. And that's going to really hurt Canada. Mexico, there's still a chance that they could do something, but the Mexican peso hasn't sold off too intently. But we've got a firm date for that. And he's played Mr. Nice Guy. Bang. They for whatever reason, they've got those tariffs. He's slapped on an extra 10% on China. Now that is more punchy than the market's looking for. They were expecting these incremental 2.5%, 5%, sort of maybe more sort of 2.5% month on month sort of tariff going forward. Scott Bessent was very much pushing for the gradualism approach. 10% is far higher. We're getting tariffs now at sort of 40% in China. We're waiting for a counter response. So it seems after this period of Mr. Nice Guy and markets sort of being very much desensitized to it, we're now seeing a much more hard-lined approach taking place as we go for reciprocal on the 4th, and then obviously the American first as well. So is the reaction function in market changing? Are we now in a situation where we really do need to start taking much more notice of tariffs again, Blake?
I think we do. And I think this is where, the market has been calling his bluff the whole time. And they're like, it's just Trump just trying to get everybody to the negotiating table. And of course he's trying to do that. But if you don't think he's going to follow through on these warnings on higher tariffs, I think that the market is not pricing in the risks still at this point in time. And there are going to be beneficiaries. You just saw it in there's a FT article that just came out just a moment ago about how Scheinbaum's trying to jump through a bunch of hoops with a drug czar. And I think countries like Mexico are going to actually end up doing something great with the U.S. and the Mexican peso is going to be the beneficiary. But then you take the other approach with Canada and Trudeau. Trudeau's like, we're going to respond. I mean, this is a Trudeau-Trump ego fest battle now.
He's gone anyway, so he's got nothing to lose. Well, he does.
Yeah, he's got nothing to lose.
His legacy, and he doesn't want to be the guy who
bends over.
Well, exactly, but I mean, Mexico and the US are sort of forming an alliance because Mexico are now, Trump wants Mexico to come out and tariff China. So but I think where we are now is that these tariffs on China are pretty punchy relative to expectations. The question for me, Blake, is two and a quarter hours time, we've got the PBOCs fixing. We've seen a sell-off in the yuan. We'll have to watch what happens with the fixing, because China have pushed back and strengthened the renminbi. Now, is this the time now where we see the Chinese looking to weaken off and devalue, which was obviously the big consensus trade at the beginning of the year? If that was to happen, which is a big if, that would have huge implications for things like the Aussie dollar and the New Zealand dollar.
Well,
do we get counter tariffs? The second thing, of course, is now we've got the NPC meeting in China on the 5th of March, the day after these tariffs kick in. Now, that NPC meeting was not expected to be a market event. The expectations have been watered right down. These tariffs potentially could change it, because they do need to keep this economic trajectory that we're seeing in China, which is improving. There's no doubt about that. They need to see that moving up. So these tariffs are harder hitting. There could be negotiations. I think this is really a very interesting dynamic that we're seeing evolving here.
And you know what? And it's making for an interesting market, which brings me to my final topic. And I had a heart-to-heart conversation with our community today, and told them
can you put some music on?
Yeah. But no, I did. I actually had a heart-to-heart, and it's great, because some of the feedback I got is like, "Hey Blake, you're taking me back to my roots. This is exactly what I needed to hear today." And I'm just going to break it for you down real simply. I spent the first couple of weeks of dealing with the a new Trump presidency, the headlines. I was getting my neck broken, back and forth. What I realized is, until we have some really good, solid idea of what is happening, because the whole tariff situation is quite confusing. Wait, is it March 4th or is it March 2nd now? So until we have some solid answers, I like to go home flat. I'm scalping a lot. I'm taking profits when I see it. I'm cutting my losses short. And I'm a really good intraday trader. I've always been. That's been my bread and butter. And I've had to go back to that, where, and I don't want to be political here, but, you're dealing with the Biden administration, or the sleepy Joe Biden administration. It is easy. It's easy to play a macro trade. It's easy to, I'm going to get long Mexican pesos and stay long Mexican pesos for 4 years. It's not that type of market, guys. So I've had to change my strategy to more active. And guess what? Once we have a better idea of the market and what we can expect and what policies are being put forward, then at that point in time, we could take a little bit more longer term approach into the market. So I've been changing my tactics. How about you, Chris? What have you been doing and telling your clients there at Pepperstone?
Well, I think up until recently, it was just about, you've got to just look at the market and the aggregation of what's the price telling you, and that was all that mattered, because you had to keep an open mind. Everyone was saying, the dollar's going to rally, It didn't. It did the opposite, because real rates were going down, and you just followed the tape, and you've got to be a slave to price action. But that's always been the way. But now I think you are. I am really interested, because this dynamic that we're in now, you've got a high volatility. You've got the NASDAQ VIX pushing higher. You've got the VIX for the S&P trading above 21%. So we're in a high volatility regime. It's not extreme, but we're in a high volatility regime. That means, right now do you want to hold positions overnight? Probably not. So you become a day trader. You have to consider that. You've got to take that position sizing down, run wider stop losses, because the ranges are increasing. And I think this is also something that we've gone through a period now where a lot of these risk assets have been trading in a sideways chop. Are we now about to see trending conditions coming through in an index level? Perhaps in FX markets as well. Maybe the yen's going to start trending again. I love trends. You adapt to the volatility, to adapt to the trend in the market. But I think it's very hard now, because I think the market is going to take, after a period of being desensitized to headlines, I think we're about to start seeing that change again. And that makes life a bit more problematic for people who want to hold risk overnight.
There you go.
Anyway, let's go to technicals. Let's go to that's the setup. Right, let's go straight to that NASDAQ 100, because I just talked about it there. But we've seen this period now where the market sort of traded to a 22,000 up to the top. We've had a nice range low. Excuse me, that's It's a sneeze. Yeah, down
Bless
into
you.
sort of 20, just below 21,000. And it's been, one which people have been flipping to the tops and buying into the dips at the lows, and that range has been, really nicely well traded. And a lot of people have done quite well out of that range trade. But now we've broken to the downside and we closed pretty close to the low. The MAG7 stocks have been absolutely carted out volumes. And certainly on the option side, we've seen, a lot of the things like Nvidia, even NASDAQ options as well, where the puts have been traded to the downside. And as price has been falling, it's gone. Those dealers, as I say, have had to navigate and dynamically hedge their deltas, and I think that's pushed it lower. So this is the setup, I think, which is getting a lot of people's attention, because we have closed on the daily basis through the range lows. It needs work. The question is now with this move, does it build? So I'd be selling rallies. I'd wait for the retest. I think it's going to get a retest of that former range lows. Then it's obviously, do we get the rejection? If we get that rejection, then obviously I think that's the leg down, and we start selling into that on the back of that. So, but yeah, this is a really nicely defined range. The fact that we've closed through there near the lows is a pretty powerful statement in itself. I think it's too early to be buying these MAG7, these influential MAG7 stocks at the moment, because I think there's just still more to go. I could be wrong. The tape will tell me, but I think this trade's lower.
Oh man, that's a big double top if it really starts playing out, Chris. Woo, range extension take us down quite a bit. All right, my first setup is going to be the US dollar, Japanese yen. I want everybody to realize that the 152 level is such a big level. You can see that it's near the 200 DMA, but it's a big pivot. You have to go back years, and the dollar yen around the 152 level has been huge. We are solidly below that. And yes, yields have sold off. Yes, the 10-year ZN contract, which is the 10-year yields inverted, if you will, we're stalling right at the 200 DMA. That's allowed yields to kind of pause, as Chris alluded to earlier today. And with that pause, with that retracement, with that bounce that we saw in yields, the dollar yen has reciprocated a little bit. But what I am looking for is I'm looking for any move back up to the 151 level or 150.90 to be sold into. I'm personally trying to sell into that because that's where that trend line, that channel resistance is going to meet that previous support. So if we can see a move back up to 151, I hope to be that lucky. I'm going to be selling into it, and that's going to be my first setup on the dollar yen to the short side.
All right, let's go to a long short strategy here. And what we've got here is one I think we've been sort of peddling recently, which is the Hang Seng as a ratio against the US 500 or the S&P 500. So obviously, as you can see, this has been going up, and that means that the numerator, the Hang Seng, has been outperforming against the S&P. Now that's not going to surprise anyone, given what we've been seeing with Alibaba, Tencent. And obviously the China internet plays. But what we've also seen in China is also the property stocks have been absolutely flying as well. We are seeing green shoots emerging. People are starting to have a belief that next year property prices will go up. I don't think it's going to be enough necessarily to turn the banks and drive net interest margins substantially higher to more profitable levels. But I think if you want to understand the outperformance of one market relative to another, then you can go on to TradingView and you can just type in the top left box in the equation, one market divided by another. Now there is a currency impact, not so much pronounced in this one because the dollar Hong Kong is a managed peg. But I think this speaks volumes here. So if you want to understand how the US is underperforming Hong Kong and certainly Chinese internet stocks, this is the best way to look at it. So can this continue? Obviously we have to see. But there's another way you can do this. You can, if tariffs are really going to go on and chips are going to get impacted more by export controls, I'm concerned about the Russell because people are looking at growth and what that means. But I think you're probably going to see the Russell modestly outperform the S&P and certainly the NASDAQ at the moment. So I quite like that cross low higher. But this is a really interesting one. And Europe's the other one as well, because Europe's been outperforming. You can have a look at the DAX relative to the S&P or the NASDAQ. But this is a good way to look at the outperformance and I mean, you clearly can see it from this chart here.
And you know what? You've been all over it the last week too. And so great calls, Chris. And man, that looks like a massive breakout if it comes.
Yeah.
Woo. All right. Well, hey, I'm gonna take you to my last setup, which is Ether or Ethereum, because Ether, does have a funky smell sometime. And this time It sure does. We brought this up about a month ago, and that's when we had that wedge before it broke the 200 DMA. And when it came under pressure, it broke down quite a bit. Now we're on a pretty key level of support on Ether or Ethereum, but I want to point out the fact that Bitcoin today, once again, second day in a row, we got really close to 200 DMA. And once we break through, if we break through like the election night levels, we're probably going to trade down to 75,000 in Bitcoin. Why does that matter for Ethereum? Well, you know, Chris, I was 28 years old. When I was 28 years old, I was trading the .com bubble. And you know what? If you asked me back when, why did you buy Earthlink today, Blake? I'd say, well, it has .com. It was earthlink.com. That's why I bought it. What did Earthlink do? I have no freaking clue what Earthlink does. It's just an internet stock. You know, I know so many people that are in crypto that have no idea why they're buying it. And unfortunately, Ethereum happens to be Bitcoin's little sister. And when it's Bitcoin's little sister and Bitcoin's getting slapped around, Ethereum is going to get slapped around too. So you're going to get people selling. They don't even know why they bought it in the first place. So if Bitcoin continues to sell off, I think Ethereum takes out that 2,000 level, and then the next stop would be probably about 1,900, maybe 1,600 on a full extensions. But be careful with your longs here.
I think so. We are seeing a bit of consolidation in Bitcoin as well. I think that the level everyone's looking at is this
75,000.
Yeah, or just a little bit below this. It's the horizontal resistance that you've had basically since March of last year. So I think that would give you a really, really good little flush out. But I think if the NASDAQ was to go lower, then one suspects that probably Bitcoin will follow suit as well. But I think there are a lot of people who may be trading this and don't have a position, who are sitting there going, oh, we're waiting for that V-shaped bottom to emerge. And maybe it comes. I'm sure it will at some stage. But again, I think what we're seeing with Bitcoin now is this idea that if you're in there for the long haul, you've got to be able to accept 40%, 30% drawdowns. It's just part and parcel of this high volatility asset. Anything that can go up to the magnitude that Bitcoin and crypto can do, then you've just got to accept these drawdowns as part of the course. And that's what we're probably seeing now. So maybe this is the dip that we're having within a long-term bull run. Who knows? But I think right now I'd be quite cautious as well. But I think that 74,000 is the level that everyone's hoping it gets to get that flush out. And
it'll be a playable level, Chris. That will be a playable level, I think. So
yeah, let's go. Anyway, let's go to play of the day. I don't really have much to say about this one other than I like it lower. Let's go to CADJPY. I mean, I think, it's going down. It's still holding below the the short-term moving averages, which I like to see, which is defining that. Rallies are being sold into. But I do think that, I think this tariff news, whilst perhaps not totally unexpected, it's been pushed back. And I think some people were hoping, or certainly people, Trudeau was hoping that we were going to see a firm removal of the tariffs. 25% tariffs on Canada is not a good situation for them to be in. Now, if they come back, and we'll wait to see what reciprocal, what the countermeasures are going to look like. Obviously people are pricing in a recession now in Canada, and far tougher times. Now, if they play hard ball back with Trump, what does Trump then come back? There could be another 25%, and that wouldn't be priced in. So, I think the Canadians will be getting into a dangerous game, getting into a tariff war with the US, even though they've been suggesting things are good. And do you know what? Ironically, it's quite funny when you see the Canadians coming out and saying they want to get closer ties with the UK and Starmer. Things must be pretty bad. So, I think it's tough times in Canada. I think these tariffs are going to keep the bid firmly away from the Canadian dollar. And, I think as well, if we're going into a world of tariffs, what's one of the things that the US administration want? They want a stronger yen. They want a far stronger yen. And I think, that's the issue. If we were to see volatility continue to kick up, FX volatility to kick up, then I think the yen's still one of the best places to be. So I think tactically and technically, this trade makes a lot of sense to me. So I like this lower.
All right. Well, Chris, it does look it looks so close to support, and they all look like they're going to break. I mean, you took the euro yen, or you just throw a slap of any yen pair on there, and boy, it looks dangerous. Holy cow. All right. Thanks for bringing that up. Now I got a lot to say about the euro dollar. So my play of the day is the euro. Now, I could argue that we're trying to develop a base here, and I want to be a buyer around 103.30 to 103. That's going to be the 618 retracement. It could develop an inverted head and shoulder pattern if we stop there. Now, playing it, what I want to see and how I'm going to play it might be two totally different things. Because if we get down there following the PCE, I doubt I'm going to be buying the euro to hold it over the weekend, especially with all the tariff risk. So I'm going to be watching price action, but I'm really more focused on a bigger base because longer term, I do believe the Trump administration wants to engineer a weaker dollar somehow, some way. So I'm there for the setup. I really think the 103 level, 103.15, 103.30, 103, those levels are going to provide two-way price action where you might be able to play it for a bounce. Holding it over the weekend doesn't sit right with me, especially going into this next weekend where whether it's March 4th, whether it's March 2nd, if we're going to get tariffs from on Canada and Mexico, we know that Europe's coming. We know that China's coming. We know it's all coming next. So trying to hold a euro long, knowing all of that, doesn't really make sense to me. But I'm looking at maybe a possible longer term base playing and forming. And that's why I'll be playing around these levels. Doesn't mean I'm going to hold on to it very long, but I will be playing. Believe me, because that's all I've been doing. Intraday trading all over the place.
One of the really hard things about this now is that when we saw euro dollar push up into just above 105, 105.30 region, a large portion of this is that Europe data had been beating, but real rates have been moving up. What we've been seeing is that inflation expectations, especially short-term inflation expectations, were rising, and nominal treasuries were sort of moving sideways, and then that sort of pushed real rates sharply lower, and that pushed the US dollar lower. So I think the Trump administration probably had done a good job in weakening the dollar through lowering real rates. Now, if tariffs are going to be a major driver with the immigration policies that are coming in, the big changes in net migration, net immigration, and Doge as well, finding these efficiencies, you've got to think that real rates are going to go lower because it's just going to keep inflation expectations fairly well anchored, and growth expectations lower will take the nominal treasuries lower, and that will impact the US dollar. But there's also great concerns about what's happening in supply in European bonds because the defense budgets are going up, and so it just makes trading euro dollar very difficult to do because from a fundamental perspective, you're seeing greater concerns about US growth and real rates potentially falling. Obviously, Europe's not a great situation. And what that does is it suggests to me that we're going to see some, like you say, we're going to be trading that range. We're buying into sort of the 103s and selling into 105. And I think that range trade holds because that visibility from that dynamic that I just talked about is still very uncertain.
It makes me a little bit more confident to be playing down there, Chris. I agree.
I think we're in for a range which may, in theory, lower volatility. The key to all this is China. It has to be China. What happens with dollar renminbi? What happens with China's growth and their stimulus? Because if China was to start growing and people and becoming that relatively better economic play, then I think that has huge implications for markets. It's good for euro and it's good for Aussie, but I think that's going to, if growth in China was to falter, I think that would really cause volatility in markets to come up, especially if US growth. So there's a lot of moving plates that we're trying to work out right now, and that visibility is uncertain, which creates higher volatility, right? So that's where we are. Big weeks, lots to look at, lots to concern, and the market is trying to grapple with this right now. Anyway. Ladies and gentlemen, thank you very much for joining us. Thank you very much for Blake for some of your thoughts as well. Always good to hear from you, mate. And we'll see you back next week for more of the trade-off. Take care.